Good morning. I hope you're alive. Good morning, good morning, good morning. It's on the 30th of April 2026, the last day of April. We're live here. Let's just start kicking it in. I'll delete everything and start afresh. Price has not touched the previous week. Have not swept the previous week low. Yet here it has swept the Wednesday's low, the previous day low. The previous day low, that's also the inside that fair value gap. You see this 4-hour fair value gap. At the same time, it has swept that previous day low, that is the 4-hour discount array. It has swept it. Discount, let's now look at premium. We are 10 minutes past the New York session open. The London. You see it has swept that low. Just trying to mark some liquidity points before we kick in. I'm just doing a rough marking. Below the midnight open. This is the 4-hour, not the 4-hour, not the 5-minute. See here at 2:05. Now the reason I've marked it so fast is that I want to see price coming to touch this. This is a quick scalp. If you enter from here to here, price will want to touch this previous week low, sell side liquidity, or it can touch it then continue going down. But what I'm only expecting bullish prices. If it doesn't give me, I'm not going to execute. I really want to see. This is what I was hurrying off when I was marking. See, this is a sweet scalp. Price starts to decline up to this. Let's mark it. Let's go back to the higher time frame and now look at the narrative. But I've given you a short scalp from there to there, that previous week, or daily sell side liquidity. That's where I want to see price coming to reach. These are weekly sell side liquidity. Price can come and even continue declining to this fair value gap in the weekly, but I am not still convinced that we will reach there to this week. If it happens, well and good. I'm expecting bullish prices. Already marked that previous week sell side liquidity. That is is also a daily sell side liquidity, right? Price will come and decline to this daily swing low or the weekly fair value gap. But we'll see, we'll wait, be patient. I'm still on the bullish side. I'm still expecting bullish prices. There is no news in this London session, but we're expecting liquidity either in the London or the New York session. Below the midnight open. This one. I'm not still convinced. I'm only looking for bullish prices. The hourly it has swept a certain. You see, it has swept a certain. It has swept the sell side liquidity, the hourly sell side liquidity. We might want to see now price rallying higher and higher, but we'll wait and see for market structure shift. Yeah, exactly too. It has shifted. It has swept it. It has swept an hourly sell side liquidity. This is to say selling the fake runs. You see the false breakouts. We are below the midnight open. If price does a market structure shift here in the, if price sweeps this high, does a market structure shift here, I'll probably be looking for longs. Because we are below the midnight open. Now if I see a market structure shift here, if price decline, disrespect this fair value gap and comes here with a market structure shift, I'll be a buyer. Right. If only price does a market structure shift with a fair value gap, that's the only way I'll be a buy. If it doesn't, I'm still not interested. Might want to see price still going down and down. Let's put an alert here. Price will alert us if it has swept that high. Let's go to Euro. Going to delete everything. Only marked a weekly fair value gap. Was it a daily? Yeah. The reason I'm expecting bullish prices on Euro again. This is a weekly. It's a weekly fair value gap. Price is inside that weekly fair value gap as for today. It's actually bullish for Euro. Reason again for bullish in euro. Here in the monthly, you see price swept that monthly low, sweeping it, started rallying high. Now what I'm expecting it for euro is price probably want to reach this high, so we are bullish. And then again, you see price is inside that the weekly fair value gap, so it has swept our daily sell side liquidity. Let's mark this one with a different color. I'm still bullish. I'm not going to be bearish on euro. I'm still bullish even if I'm seeing price still going down, declining. It's also Thursday. That's the reason I'm bullish. It's Thursday now. We are expecting the weekly reversal. It might reverse in the New York session or probably in London also. But here price is inside a weekly. I was expecting price, if it will touch this daily fair value gap, that will want to see price rallying up higher to these highs, and up to these highs, and up to these highs, to this high. Let's look at 4 hour. Yeah, probably there's a sell side liquidity, the 4 hour sell side liquidity. If it sweeps it, it will be a very, very high probability. Now these are the entries. This is inside of weekly fair value gap, daily fair value gap, 4 hour sell side liquidity. It's also a fair value gap. Now if you actually buy from here the smallest lot size, then put your stop loss here, it will be a guaranteed buy, but you'll have so much to risk. It's a 50 pip. Yeah, you can risk 50 pips to get something like 100. That's 1:2. In fact, it's 200, around 180. If you do a swing trading from here to here, if I will be that swing trader, I will have much capital to sell, to buy here, put my stop loss here, and take profit there. I'll add a position to continue higher. The 15-minute. Now these are for scalpers or intraday traders. The midnight open for euro. Yeah, we're below it. It seems like an SMT. 0030, 0030. Is anybody seeing an SMT that I'm seeing? Hello. Is anybody seeing that SMT? this is a higher high, a lower low in the euro. Then the cable is on which has swept that. It has swept it. Now that might be a run. You see, in the euro, you're expecting bullish prices also because it's an SMT. You see, it has declined to sweep that low. Right. See, it's going to do also a market structure shift here in the euro. Inside the daily, inside the weekly fair value gap. You see, if you see a market structure shift here, if you see a market structure shift here with a fair value gap in the lower time frame, this is also an inversion fair value gap. Now if you see a market structure shift here, any decline to the first, any retracement to the fair value gap, that's where you want to buy. That is why you want to buy any retracement to the, see, it's a good range. If it does a market structure shift there, then with a fair value gap, you will want to buy and put a stop loss below here. If only you see a fair value gap, market structure shift with a fair value gap. This a fair value gap was already happened. If it happens to come above it, then decline it, come to the fair value gap, you want to buy. If it fails to have a fair value gap, I'm not interested in buying. Not a good range. Confirmation buying. It's kind of confirming that we are buying it. Now we'll wait. After 3 minutes we see what it has done. Then we'll probably, it has done a market structure shift there because we're below the midnight opening price. I'm not going to hurry to enter the buy. Let's see, market structure shift in the euro. Yeah, it has done the market structure shift. Let's see what they have in the 5 minute. Now in the 5 minute, we'll wait for that 5 minute candlestick to close, 5 minute time frame candlestick to close. Then it probably gives us a port 90 to a fair value gap. We'll probably wait for it's done a market structure shift. We'll probably wait for a fair value gap formed in the 5 minute. Then we will enter. You can enter now at 227. I'm talking at 228 exactly. It has clocked in. If you see a retracement to a fair value gap, 5 minute fair value gap to see, I'll buy it, then put a stop loss there. Also in the euro, if it closes, and also in the euro. If it closes the fair value gap, that one if it closes, if it forms a fair value gap there, you probably want to buy it to that high. It's a lower low, it's an SMT. See it? It has failed to sweep that, so it's a good SMT. Yeah. Now the 660, how it teaches, the 660 is going to be the cable. It has swept it now. The euro is so bullish because it has failed to sweep it. Sweep the high. Now let's wait. If it retraces inside that 5-minute fair value gap, we are buying it. Now it's a 5-minute fair value gap. That's done a market structure shift. Market structure shift, it has come to this order block, this 1-minute order block here in the cable, but no retracement to a fair value gap. We'll probably wait to see what price is doing. Price is so bullish. Is there any retracement to a fair value gap? There is none. This is another block. Now any fast retracement to a fair value gap, it's probably want to see a bullish price. Any retracement to a fair value gap. See that SMT. Also the euro. Is there any retracement to a fair value gap? There is none. But this is another block. Price should not come below this. Price should not come below this. It's declining, really declining. Now that's why you'll want to see price coming down and retracing back to any fair value gap. See how price is bullish? Let's come above the opening price. It's happening in the hourly. It has disrespected that hourly. See this fake run here. Is this a turtle soup? Maybe it's a turtle soup. Price might want to come. That's a fake run here, you see. Soaked it and started rallying. Now any retracement to a 1 minute fair value gap or a 5-minute fair value gap, entry to a 5-minute fair value gap. Price can come, consolidate, then starts retracing down to a fair value gap, but a stop loss you want to put it here below this. If it does that, the euro is also a buying opportunity. Same to here in cable. It's a first push. Only pips of values. Oh, 100 pips. It might be. That's a retracement. Stop loss will be around here. Now you see that retracement. In the 5 minutes, see it has retraced to that is the earliest entry, but we want to also do wait for 5-minute fair value gap retracement inside it. This one price can also come to here, or after closing the first fair value gap, then price starts to rally higher. But I've showed you this one, told you don't want to see price coming below this. In the euro, also we're expecting some more bullishness in the price. I'll mark liquidity points that I want to see price reaching in the euro here. The euro is so bullish because we are inside a weekly fair value gap, and also it has done a market structure shift in the 5 minutes. Also currently we have fair value gaps that are not unfilled, but we are expecting them to be filled. I'll go to the early and mark the liquidity points that I want to see price reaching onto. It's a first liquidity there. Oh, what did I do? First liquidity, second liquidity, third, I'll work with those liquidity for today. How many are those for? Also 100 pips in the 4 hour. Yeah, this is the first exit, second one, the third one. Currently price is inside a fair value gap, a 5-minute fair value gap below the midnight opening price after market structure shift. Whoa, those are a lot of pips. That is not probably a good entry, because price has really, see, it should be something like 10 pips. I don't want to see price coming below this order block. I'll leave it at this point and see what price will do. I'll come here at 4 and see what price has done and wait for what price has done. If we take a loss, that is the only loss we're going to take for today. If it's a loss, yeah, it's not a good entry because price has really pumped higher fast, and our entry should be 10 pips, but currently we are seeing like price has rallied like 20 pips. I'm expecting this to be a fake run there. Let's put it at there. Let's wait for what price will do. as I'm expecting, still bullish prices. I leave it there and come back after some minutes and see what price has done. If we take a loss, that will be the only loss for today until let's see how price will play after the next 30 minutes. Watch and see. Yeah, price is still rallying up and up. You see that? It has already done a market structure shift. It has inside a fair value gap. Not we'll expect price to go high and high. I tweeted yesterday I'm expecting bullish close today, and let's see if it will happen. Now, I want to do something crazy. I want to leave these charts like this until 5 a.m. Eastern time. I want to leave it until 5 a.m. and see what price has done. In the euro, what has happened? Yep. In the euro, I'll also put an entry in the euro. Here is another entry. I told you I'm expecting a market structure shift. In the when you are still down here. I told you I'm expecting a market structure shift below the midnight opening price. My guy, you know I'm talking to you. Below the midnight opening price. Inside a fair value gap in the 5 minute. Touched it nicely. Now we are going long from there. Stop loss should be around there. I'm not putting it here because this is an SMT. This low should not be broken out because it was an SMT. Is anybody calling the markets live in your place? Because I'm doing it here. The euro starts to rally up. Price is price, baby. Price is price. The euro charts. This is actually the halfway point of what we are expecting, but price is going to be here. But this is actually the halfway point that this is the halfway point. This is the halfway point. I'm saying it again. 54 pips. The DXO, I'm expecting a down close candle. Then the daily. Here in the euro, we are doing on great. I'll actually come and see what price has done. I'll come back after 30 minutes. I'll come back after 30 minutes and see what price has done. And we'll still go up and higher and higher and higher. Whoa, check it again. If you put a stop loss here, this is a market structure shift in the 15 minutes. Usually when it does something in the 15 minutes, now I'm probably sure and expecting higher prices of more than 50 pips or more than 40 pips to be precise. After 2 minutes, price will come inside that 15-minute fair value gap, then it starts to rally. Still expecting bullish prices. Let's wait for it. Come back here probably after 2, after around 4. I'm not changing my bias. See that 15 minutes. Let's come here at 4. I'm going to leave it for 1 hour and see what price has done. enjoy the live. Let's wait. Yeah, I'll come here after 1 hour and see what price has done. Keep watching the live and see how I call these markets live when they're happening in real time. It's actually 3. Yeah, the economic calendar, Federal Reserve issues FOMC statement. That was the FOMC yesterday. So after the FOMC, you'll want to trade, but before it, if you trade, you can die, you can perish. Now also, if we fail one trade, if we fail a trade in this London session, we'll probably try again our last chance in this session, the New York session, where we'll have the BOE bar, the Great British Pound bank rate. Oh my, price is rallying. We'll come here at 4 and see what price has done. But so saying the euro is playing out nicely how we have said it. The euro is also playing out nicely. The euro is also playing out nicely. Bullish prices. I today yesterday I'm expecting a bullish close. Keep doing it. Playing out nicely how we have said it. Here still again. I'll come here at 5 a.m. a few minutes to 5 and see what price has done. Since we are still early on in the London session, let's be patient. Wait for 5 a.m. Mic check, mic check. It's actually 410. Price has moved it's 30 pips, but it has not tripped. We are targeting for this external liquidity. Or we are looking for to exit at 5. Now, price is moving on well. Return that thing that I put here. Yeah, that one. Price is moving on well. You can see. I'll exit something at 4. At 5. I'll want to take something at around 5. I will come back here at 5. At exactly 5, that's when you will want to exit our trades. Happening in the euro. Yeah, as I said, euro was the cable was the 6 sister. The cable was the 6 sister, so this one was so bullish. It's actually reached 30 pips. It's actually doing it in the euro. As I had outlined, it has reached our first target. See? Reached our target. Now we are going to look for this target and this target. Yeah, let's keep on expecting bullish prices until 5 a.m. At 5 a.m. I'll come back at 5 a.m. and you'll see what price has done. We're going to exit at 5 a.m. You want to put your stop loss at what level? 37, 34, 720. You want to put your stop loss at there so that price you lock in some profits. prices and we'll exit our trade at 5 a.m. That's according to us traders. Let's come back here at around 5 and see if prices rally down. You'll want to exit your position at around 5. You'll want to exit your position at around 5, and that's what I'm telling you guys. I've done it for a long time, and as you can see, price is respecting what you are trying to do, and it's something that it's doing it, and folks, it's probably right. I'm not going to still exit. Still expecting bullish prices. The reason why I'll want to exit a trade is when price has swept this low with a fair value gap. But if it has not, I'll not want to see it coming below this low of this order block, even if it can, but I'll still expecting bullish prices. And I'll wait. As you can see, price is as respected. We were here, price has come here. This to here is also an entry. It's an entry and an exit. This to here, you see this. How many pips are those? It's around 20 pips for free if you would have stuck with me, or you exit at 30 pips. But since we trust our model, I will come here at around 5 a.m. Eastern time. It's around 4:19. I'll come here at 5 and see what price has done. Now that's when we'll want to exit our trade. But if it has not done, I'll want to see price keep on rallying up higher and higher up to you can actually do a swing trade from internal range to external range. This internal range to external range, which is here, which price can also be continuing to consolidate or continue rallying for tomorrow during the London or New York session. But but I'm still expecting bullish prices. Let's see what price is going to do. We're going to exit our position at around 5. I'm not going to exit it here. I'll take my full profit maybe at around 5 a.m. and see what price has done. Until we meet again, let's wait and watch price doing its thing, as we call it, live. Remember in the morning I told you that the euro was the sixth sister. Like the cable was the sixth sister, right? Just done it nicely there at 240. Keep on rallying. In fact, price is price, not only cable that I used. But you see here, price has actually done it. In the euro also, it has also given us around 30 pips. But there is around 25, but you're still not exiting, expecting bullish prices. You can trail your stop loss and put your stop loss here so that you be at break even whether you have lost or made money. Put in the cable, put your stop loss here. We entered here, stop loss at break even, and see what price will do. Let's wait for it and see what price is doing. Keep on watching. That was a smooth retracement. You see this retracement here. I'm also telling you the traps. You see this is also fair value gap. Cheating you that let's sell, but it's buying. You are bullish. At around 5 a.m. I want to exit something, then leave something running, but I know it will go over 100 pips.
Ryan Little.
Japan.
Ryan Little.
Yoga.
stream.
Mic check. I'm here, guys. Now watch price. Now let's watch price. Yes, I marked. This was the first partial. Remember it? Why we marked? Anytime I've marked a price, it's where I put a partial. Like you want to pay the trader, as we say. You want to pay the trader. You want to pay the trader. Still expecting more bullish prices, but I want to show you how we'll manage this trade so that even if price reverses, you know this is also a 4-hour high. Even if price has reversed to this low, the price can reverse down to this low and reverse even more and more up to, see this unfinished business here. These also are for a weekly sales, the previous week low. Price can reverse so that if it is reversing, then gives us a good setups here, right? I've already taken something out, or even price can say that we are still going higher and higher, but let me show you how I'll be managing this trade. Hope you've taken out something here. You took out something there. How price hit it. Now you'll want to trail your stop loss to here, to this low. You want to trail your stop loss to this 240 AM low, and you want to put something. If you have taken out something, well and good. If you have not taken, trail your stop loss, and you come to put something. Price will revisit this one. If it can revisit this high, can revisit, then go. It can revisit it, then continue rallying higher, But what I'm expecting, if price is going to reverse, I'm still not sure, because might also be reversing, because it has taken out a sell side liquidity. It might be also taking out that sell side liquidity, doing a fake run, then start trailing higher. You see how it did here in the hourly time frame. You see, this is a fake run. Anytime a significant price move high is expected, always anticipate a measure of sell stops being taken out. That's according to ICT month. I think it's episode 2 or 3 in his 22 mentorship. Now this is a fake run. You see this? It's a sell stop. It might be doing something nice here, putting that sell stops there, taking out that sell stops, then continue rolling higher to this high. But I'm still bullish. It can be still keep on going high and high. You see? Let me show you. You see that SMT? This high at 00 Thursday, the 1 hour candlestick at 00. The 1 hour candlestick in the DXY. It has not, you see, it hasn't been swept that high, while here in the cable it has swept it, right? I'll still be expecting bullish prices. Price can also reach up to this high, but if you've not taken out something, put a limit here, put something here so that you can take out something. But as we're still managing the price, we are still expecting bullish prices, and I'm going to live stream this thing until I'm not going to close it. I'm going to just continue. I'll just close it, then come back at New York session. See, anytime I say significant price move low is high as expected, price will want to revisit this high. Then there is when you want to take like a half of your trade, right? You will want to manage your trades. But as for what you're expecting, these price will reach here, and we'll see. It might reach tomorrow. Yeah, because we really had a very consolidating day. Week. Previous week was so consolidating. Now, price can reverse up to taking out also this sales, but I don't want to see it taking this out. Let's expect price coming back to this high, and see it. It's London close. The London Open, I mean. Like it's the London Open has ended just now, and I'll want to end the live, but we are still on the trade, so that I'll come back during the New York session, where we'll be having news. Let me show you the news that I'm referring to. I'm going to end it. This is the economic calendar. Now, as you can see, at exactly 7 today. Yeah, it's here. At exactly, oh, they have moved it. It was 7. Oh yeah, it's here. This one. The 7 a.m. At 7 a.m. exactly, I'll come here at around. I'll try my best to come at around 6:50 and see what price has done. But at 7, you're expecting some liquidity to kick in, but we'll wait and see. We will end the live there and wait for the New York session open. The New York session open, where we also have a news at 8:30. Employment cost. We also have news at that time. We'll see what we'll have in the trade. idea, but we are still bullish. We're still expecting bullish prices. I have not changed my bias. I'm still expecting bullish prices, and we'll see what price has done. Until we meet again, keep on watching the cable markets, and I'll show you. Price is reversing. I'm not going to end it because I'm seeing more liquidity kicking in. No, I'm ending it. I'll end the live, but I'm still expecting bullish price. I'll still come at New York when price with this same chart. Yeah, I'll still come in New York with this same chart, and we'll see what price is doing. Still bullish. Remember, when price reaches here, you take out something, and until we meet again during the New York session, let's be patient for the New York session to open in the next 1 hour, 50 minutes. Yeah, I'm going to end it there. Good trading day.